Okay, hi everyone. Welcome to today's webinar. So for today's pre-market analysis, we're going to be looking at a couple of charts. So if you guys have any requests for any charts, feel free to pop them into the chat. Can you guys hear me? Okay, should be okay now. Yeah, let's go ahead and get started. So as per usual, before we get started, a disclaimer. IC markets global does not represent that the material provided here is accurate, current, or complete, and therefore shouldn't be relied upon as such. The information provided here, whether from a third party or not, is not to be considered as recommendation, an offer to buy or sell, or the solicitation of an offer to buy or sell any security, financial product, or instrument, or to participate in any particular trading strategy. Risk warning trading forex and CFDs carries a high level of risk to your capital, and you should only trade with money you can afford to lose. Trading forex and CFDs may not be suitable for all investors, so please ensure that you fully understand the risk involved and seek independent advice if necessary. Please read and ensure that you fully understand our risk disclosure. Okay, so here's our agenda for today. We are going to start off by looking at some forex majors. So if I see a couple of requests for a couple of majors in the chat, so definitely go through those and a couple more. And then we'll look at commodities, crypto, and indices, or any other requests that you guys might have. Okay, so I'm Melanie and I'll be your speaker for today. I'm an investment analyst from Rocket, who are finalists for Best FX and Equity Research in the years 2019 to 2021, specializing in technical analysis with a focus on Fibonacci retracements, extensions, and projections. Okay, let me just pull up my charts and then we can go ahead and get started. Okay, let's first take a look at this week's fundamentals. Okay, let's first take a look at this week's fundamentals. I'm using Forex Factory for my academic calendar, but you can use any website that you want. So I'm going to click on today's date, look at this week, apply settings, and you can see I have it filtered to only look at the medium to high impact events that's indicated by the orange and red icons. Okay, so for for Monday, which is today, we have the German IFO business climate. Tomorrow we have Canadian CPI data. And then on Wednesday, we have consumer confidence data, Richmond manufacturing index data, and Aussie CPI year-on-year data. On Thursday, we have US new home sales, final GDP, unemployment claims for the US, and on Friday, we have pending home sales again in the US. We also have US Chicago PMI and core PCE price index. And then in Japan, we have Tokyo's core CPI data, Euro's Spanish flash CPI, Canadian GDP, and yeah, that's about it for this week's. So you can also look at the low impact or any non-economic data. Or you can filter out any event types that you're looking at or any specific currencies that you might be trading. Apply filter. You can see there are a lot more events to take note of. So that's why we typically just look at the medium to high impact events so that we can see what might impact our charts the most. Okay, so now let me just pull up my trading view. Okay, we have two requests for gold, so let's take a look at gold first. Um, okay, so I'd like to start off by looking at our higher time frames first so that we get an idea of the direction that price is headed towards. So you can see on our weekly time frame, prices have been moving upwards, but fluctuating in recent times. On our daily time frame, we kind of see that same trend. Okay, so I'm gonna go ahead and see if we have. Firstly, the first step is to see if we have any trend lines or trend channels. Here I don't think we have. Yeah, we don't have any trend lines or trend channels here. Okay, so I'm gonna go ahead and go straight in to look at our horizontal levels. Okay, so we normally will, I'll normally advise to follow the direction of price. So you can see price is generally heading in a uptrend. So that's why I'm trying to follow that uptrend now. Unless we have very clear, obvious signals that there's gonna be a reversal, and that can be from your Fibonacci levels, or your indicators, then we might consider going in the opposite direction. Okay, but for now, it seems like we'll just follow the direction of price. So you can see my 38.2 lines up nicely with my first support. Okay, here my 23.6 also lines up with my first support. Okay, okay, and see my 100% also lines up with my first support here. Zoom out. Okay, okay, is this better? Okay, um, where was I? Yeah, so I just did a projection. So, for projections, we typically will look for this kind of a flash shape like this. Okay, or like this, like a lightning bolt kind of shape. Okay, and the levels that we use are 61, 78, and 100. So you can see my 100% lines up with my first support as well. So I'm just gonna keep my 100. And here you can see we already have this really, um, oop, we have this pretty big confluence area here. Okay, so basically what a confluence area is if there are two or more Fibonacci levels that line up in the same area, price is typically more attracted to these areas. That's why we want to be able to identify them, but price might not be able to pass through them. That's why you can see that price has recently tested these two areas, um, yeah, but wasn't able to pass through them. Okay, I think that's all the levels that we have. Let's continue taking a look. Okay, my 100% also lines up with my first support, first resistance rather. Okay, I might actually add a intermediate resistance over here in line with this 61.8 and also the swing high. Okay, let's see if we have a retracement. Okay, 61.8 again, retracement lines up nicely. Okay, so because of this confluence area, I am expecting prices to continue to move upwards. Let's take a look at. Okay, I'd like to start off by looking at our Ichimoku and MACD. When it comes to indicators, simply because they kind of tell you what the signals are at one glance. Okay, so you can see recently there's been some fluctuations, although it's been generally bearish for MACD. There was some bullish momentum over here, so I am expecting that to continue. Ichimoku price is moving within the cloud, so we can't really use that. Our KIV, my MACD as well. Let's maybe look at our RSI. Okay, it's not telling us much. Hmm. Okay, from here to here, we actually have a okay. So from these two levels, you can see that price is making a higher high. Okay, but on our indicator, you can see that this is a horizontal support level. So this is what we call a hidden support level. Okay. Yeah, so I'm expecting you can see price recently bounced off this level, so I am expecting prices to continue bounce with that. Yeah, let me just zoom out now. Okay, wait, give me a second. Okay, I'm back. Okay, now let's move on. Hi. Okay, can we look at okay, so let's now look at a couple of forex currencies. Um, let's start off with pound. Okay, so same thing, I'm starting off by looking at our weekly time frame. You can see recently prices have started to pick up. So if we look at our daily time frame, you can see that same kind of uptrend here. Okay, let's firstly see if we have any trend lines or trend channels. Okay, no. Let's see. Okay, we do have an ascending trend channel here. Okay, now let's go in with our Fibonacci levels again. So here's my pivot. Up here is my first resistance, and down here would be my first support. Okay, I'm actually gonna get rid of this trend channel. Okay, so a good habit to have is to try and pull back your horizontal levels as far as you can so that we can see how significant these levels are. But you shouldn't be cutting through too many bodies of candlesticks. So for example, if I want to place it here instead, over here, this area, we are kind of cutting way too many candlesticks in these regions. So you want to make sure that there's just a very clean cut of the candlesticks. So like over here, we have swing low here, cuts one candlestick, swing high, cuts one candlestick, and then another swing low. Okay, so this makes it an overlap level, which is a pretty significant level for us to take note of. Okay, so now I'm gonna go in with my Fibonacci levels again. You can see my 30.2 lines up with my pivot. Okay, my 100% lines up with my first support. We might have a Fibonacci extension here at the 161.8. So for Fibonacci extensions, we are looking for this Nike tick kind of shape. So this is an inverted Nike tick. So obviously an upright Nike tick would look like this. So long as the tail end of the V shape surpasses 100% of your Fibonacci like it does here, that's fine. Okay, and the levels that we use are the levels that are greater than 100. So you can see my 161 lines up nicely. Yeah. And something that I like to do as well is to just get rid of the 0 and 100, so I can see more clearly, or rather, at one glance, I can see exactly where are the confluence areas in my graph. Mm, okay. Okay, my 78.6 lines up with my first resistance. So for confluence areas, they don't have to line up exactly at your resistance levels. Reason being that, like I mentioned, we are looking for confluence areas more so than specific levels. So you can see at our first resistance, we have 3 swing highs that are lining up with our 78.6. Okay, so it's pretty significant level. Um, okay, I just want to see if we have any other levels that I'm missing here. Okay, my 61.8 lines up with my first support. Okay, so you can see we do have this huge confluence area here as well. Okay. Okay, now let's take a look at some indicators. I'm going to start with Ichimoku and MACD again. So price is moving above the cloud, which is giving us a bullish signal. But I think that price is going to continue to drop towards our first support. Okay, but since there isn't really a general trend or general direction that prices are headed towards here, I would wait for price to break out of the pivot before going in for the sell. just to be sure, because there might be a reversal over here as well. So you can see our MACD does support our analysis. Ichimoku, I'm going to KIV it because it does look like it's approaching the edge of our cloud. Okay, let's maybe look at our RSI. Or stochastic. Okay, um, mm, okay, so that similar concept that I was talking about earlier, about the hidden hidden support, that's what we have here as well. So you might see praise reverse off and hit outwards. So let me get rid of my MACD. Okay, so you can see here, here, um, here. So you can see praise approaching that same horizontal hit level. Okay, so we might see praise reverse off this level soon. Okay, and hit upwards. Okay, but yeah, we'll just have to see if praise reverses off of the pivot first before going in for a buy. Okay, so that's for pound. Next, let's look at Aussie dollar and then we'll look at dollar yen as well. Okay, um, okay, so now Aussie dollar on our weekly time frame, you can see prices generally dropping. But if we look at our daily time frame, okay, you can see prices really fluctuating here. So now I'm gonna go in with my actually okay, we'll start off with any trend lines or trend channels. Okay, but I don't think we have any here. Okay, we do have an ascending trend line here. Okay, so just to recap, what makes a valid trend line is if there are at least 3 touches on your trend line. So here we have 1, 2, and 3. Okay, yeah, let's now go in with our horizontal levels. Okay, this is my first resistance, and I might actually place my pivot here instead at the swing high, and then I'm gonna try and pull it back. Mm, okay, no, because it cuts too many candlesticks over here. Okay, and then I'm gonna place my first support just over here. Okay, now going in with our Fibonacci levels again. 61.8 lines up with my pivot. Let's see if we have any projections. You can see my 61.8 lines up with my pivot. Okay, I think we might have an extension here. Okay, now 127 also lines up with my pivot. In case you can't see, let me just draw the Nike tick. Okay. So again, this area is a massive confluence area. Okay, my 78.6 retracement lines up with my first support. Okay, I might add some intermediate levels as well. I think firstly we might have one here. Okay, so firstly, the first step is always to look for graphical levels. So like I'm placing it over here because of the swing low. And then after that, we'll go in with our Fibonacci levels. Okay, so my 38 lines up with my intermediate level support. Okay, so now let me pull out my indicators. So price is moving above the cloud, which is giving us a bullish signal, so that doesn't match our analysis. Whereas MACD is giving us a bearish signal, so that does match our analysis. Let's look at EMA and SMA. Okay, if we zoom in, okay, let me just adjust the time. Mm, okay. So on our SMA and EMA, you can see both our price moving above both of our indicators. So that is giving us a bullish signal. So I'm going to get rid of it because it doesn't support our analysis. Okay, let's maybe look at Bollinger Bands. So you can see that on our Bollinger Bands, we are seeing this kind of squeeze here. Okay, where so this area of our Bollinger Bands are pretty wide. So when you see this squeeze, it basically happens when the volatility reaches a 6-month low, and you can see it's a pretty minimum distance apart. So the bands, the upper band and the lower band are pretty close to each other. So it suggests that we might see a breakout out of the Bollinger Band. Okay, so now let's take a look at RSI as well so that we can determine the direction of the breakout. Mm. Let's see if we have any trend lines. No. Okay, we can see a general downtrend over here. Okay, in recent times, we are seeing this downtrend. Okay, so it does support our analysis that price might continue to drop from here. Okay. But again, be mindful of the intermediate support level here. Yeah, because it's in line with a swing low and also a Fibonacci retracement. Okay, okay, now let's take a look at dollar yen, and then we'll take a look at euros. So you can see prices moving upwards on a weekly time frame, daily as well, actually. So if we look here, I am of course going to place my pivot over here, and then my first support at this swing high is actually an overlap. So overlap is basically when there are swing highs and lows that respect that area. Basically means that there are bulls and bears that respect this area as well. So it's important for us to take note of those areas. Okay, so when it comes to charts where there are no higher levels of reference for us to place our first resistance, this should be for support. What we'll do is we'll go in with our Fibonacci levels and look for any extensions or projections. So you can see here my 161 lines up with my pivot. Okay, my 178.6 lines up with my pivot. So I think my 100, yeah, so I'll place my first resistance at my 100 projection. Okay, and then I'll just keep the 78 and the 100 since my 61.8 has already been broken out of. Okay, and you can see my 168 also kind of lines up. Okay, so my 127 lines up with my pivot. My 168 is all the way up here, so I'm actually just going to keep the 127 and 161 just to KIV. Okay, and I'm expecting prices to continue to move upwards since the general trend has been pretty much moving in this uptrend. So it's 127, we have a 78 and a 161.8. So this is a confluence area and our pivot. Okay, so we might see prices test this level for a little bit, which is why I will wait for it to break out of the pivot a little bit before going in for a buy towards our first resistance. Okay, now let's look at our Ichimoku and MACD. So on our Ichimoku, prices are moving above the cloud, so it is giving us a bullish signal. MACD, you can see, is also giving us a bullish signal. Maybe we look at stochastic. We can see prices moving in this ascending trend line. Okay, so that's also a pretty bullish signal. Okay. Yep, no worries. Thanks for joining us. Okay, I think we have time for one more chart. So I'm gonna take a look at Euro Oz now. Okay, so on a weekly time frame, there isn't really a clear trend. You can see prices have been moving upwards, but there's been kind of this shift. Okay, now on our daily time frame, it looks pretty bearish. So that's why it's important to compare between the different time frames. Okay, let's look at, okay, here we have a descending trend line. Okay, we have 1, 2, and 3 touches. Actually, maybe even 4. So that's why this is a valid trend line. Okay, I'm gonna place my pivot at the swing low over here. Okay, my first support over here. And my first resistance maybe just here. Okay, so obviously you can see we are expecting prices to continue downwards towards our first support. Maybe go in with a projection first. Okay, I might add an intermediate level here. Okay, because it's in line with this 100%. So we might see some price testing that level a little bit. Okay, none of the levels match up here. Okay, now here, my 61 point, excuse me, my 61.8 lines up with my first support. Okay, my 38.2 also lines up. Um, okay, my what's this, 61.8 also lines up with my first resistance here. Okay, maybe we have an extension here. 127, yeah, 127 and 161.8. Okay, so Over here, again, my Nike tick is like this. Okay, price is currently at the 127, but projecting it to maybe hit our 161. Okay, that's all the levels we have, I think. Um, but even if it's not all the levels, you can see we have quite a substantial amount here so that we can identify where are the confluence areas, and that's the most important. Now we look at Ichimoku MACD. Price is moving below the Ichimoku cloud, so it does support our bearish analysis. And then on our MACD, it's also giving us a bearish signal. So once again, supporting our analysis. If you want, we can look at Bollinger Bands as well. You can see price peaking below the lower band of our Bollinger Band. So again, it is supporting our rather bearish analysis. Okay. Okay, do you guys have any questions or okay, if there are no questions and no more requests, that's all for today's session. Thank you guys so much for joining me. I hope you guys found the session helpful. Um, let's see. Yeah, okay. Yeah, have a great rest of your week and the rest of your day. And I'll see you guys again next week. Thanks, everyone. Bye. Thanks, Andre. Thanks, Roy. Thanks, everyone. Bye.